All right, welcome everyone. Thanks for joining our webinar. It's the Water Events Prevention, Response, and Financial Impact webinar. So we have a great panel for you guys today. We're going to go over the water risk and events that move through a building and how it can impact your budget, your plans, and how it can affect every single aspect of your building management. So our speakers today, we have a great lineup. First, we have Erin Norgaard, then we have Amanda Silvestri, we have Lindsay McNally, and I am your moderator. My name is Ruth. So we're going to go through how to get set up for success, really, how to be prepared for the inevitable. So we'll start with risk identification and prevention, and then we'll move into emergency response. And then we'll move into financial planning and decision making. So really, the objective of this webinar is to get you guys set up for success and be prepared for the inevitable, because water events, floods, leaks, and water damage are the leading cause of property damage insurance claims in the industry in Canada. So we want to come away from this webinar today with a lot of practical tips and help you feel educated and prepared. So as we go, feel free to post questions in the chat. We'll try our best to get to them and answer them all. But we'll start out in our section about prevention and risk identification. And to do that, we will invite Erin Norgaard to speak on that topic. So he's the Director of Operations at Norgaard Solutions. And Erin's background is in business consulting, environmental solutions, construction, and he focuses on helping organizations reduce and identify risk and improve resilience for corporations. So he's known for his very practical solutions-focused approach within property management. And he'll be sharing his insights with us today on planning and identifying for prevention and risk. So without further ado, take it away, Erin.
Thank you, Ruth. Hello, everyone. It's good to be with you, and I'm with proper experts here, so it's a privilege to be together with you. Now, our goal is to bring a holistic approach to water events because it continues to be the biggest driver of property damage and insurance claims, and it has been like that for a long, long time. And we're at the point where technology is up to the task and it's cost effective enough where we can manage our water. So it doesn't have to become a larger liability. Now, for the prevention side of things, we're going to break it down into two basic things. So we'll understand the problem thoroughly, and then we'll precisely integrate a prevention solution. So that's our two goals as far as the prevention goes. Basic principles of water mitigation is that the majority of water events, and this might be unintuitive, but the majority of water events happen in predictable locations and sometimes often at predictable times. And that gives us a huge advantage to be able to mitigate the risks that come with water events. System leaks usually fall under three basic categories, and we can see that in our slide. We have construction damage, we have unit appliance failure, and plumbing rise or corrosion. So construction damage, that's something, when it's being constructed, something gets punctured, or a contractor or builder tends to use maybe low quality pipe material. They're on a budget, or inadequate insulation in one part, and then during the winter it freezes and bursts. Secondly, unit appliance failure. So that's things like washing machines, toilets. We take out the washing machine and then put it back too hard. Fixtures break, crack, and common things like dishwashers and sinks. That's where we expect to find a lot of leaks. And then the third one, which may not be one that we talk about as often, but plumbing rise or corrosion. So pipe corrosion, which is a natural part of having metallic plumbing, and mechanical stress. As a building settles, as the winter heave might bring it up, The movement and breathing of a building can cause a lot of mechanical stress on a building. So those three areas are what we're basically looking for. Of course, there are other ways that water can get into a building and cause damage, but those are the ones that we'll particularly look for. And what we're seeing often is that as soon as a building is occupied, condo managers are in a fight against water right away. And we know that a water leak will happen somewhere eventually. So the real problem is the response gap as between the water event and then when someone actually sees it and then coordinates an expert response to it and then actually fixes it properly, it can be hours leaking in, and that's in an ideal situation. So in a worst case scenario, it can be causing damage unseen for years, which of course we know can be catastrophic. Now, when that conventional approach keeps cycling through, the spikes in costs, because it's not consistent, the spikes in costs are huge for remediation, of course, but also with the cost of relocating residents. In the case of condos, insurance premiums, they have no mercy when it comes to water issues, especially when there isn't a prevention system in place. And your equity falls pretty dramatically in sequence. And that's never mind the potential loss of sale when you have a building that has a reputation of having high risk. So let's deal with it. We'll focus on one of the most predictable and preventative problems first, and that's pipe corrosion. So we have a couple of good visuals on our screen. Metallic or metal plumbing continues to be one of the more robust and reliable materials to use, more so than plastic, but it is a little bit more expensive and it will inevitably corrode. We know that. Systems break down. Now, in the case of copper, one of my personal favorites, dissolved oxidants in water react with the inside of a pipe surface to slowly take out one atom at a time. Now, it's not uniform, but it is systemic. And it'll happen more intensely in flow points that have more pressure. Very slowly, this is going to thin the wall of the pipe and it's going to form pinhole openings where water can leak through. And you can see that noted in the picture. It's we see the copper pipe there, and that one little white dot is a pinhole leak. Now, it's not a fast process, all this happening. It's around the 30-year mark that we expect this to happen. That's when pinhole leaks will have formed. Extensive corrosion will be seen throughout the system. Now, there are a few solutions. Commonly used has been epoxy lining in the past. It's not a long-term solution because it predictably fails. Introducing dosed phosphate into the drinking water can be somewhat effective for plumbing, but it's not healthy and it's not eco-friendly. Total pipe replacement is a good fix, but it's a huge cost and it's a huge disruption to in the context we're talking about in a condominium. So the best solution that we've found, because we integrate a number of risk reduction solutions, the best corrosion control program that we found is using a sodium silicate dosing system. Particularly, we use the leak shield system. Now, when the trickle is maintained of the sodium silicate, it forms a thin ceramic coating on the inside of a pipe, which seals any existing pinhole leaks and corrosion, and then it prevents any further corrosion, extending the life of your plumbing indefinitely. And that means that instead of spikes in your water event costs, you have low predictable costs without the massive pipe replacement costs. Now, as a side benefit, or as a bonus, sodium silicate is self-limiting molecule. So it cannot build up in the system. It stays one molecule thick. It's 100% NSF approved for consumption. In fact, it's included as an additive in multiple health products. So that's why we integrate systems like a sodium silicate system from Leak Shield for that specific problem of pipe corrosion. Now, just regarding sodium silicate, here's a quick case study with a smaller condominium building. We're able to watch this one a few years and get good perspective on it. Now, this building infrastructure was at the point where corrosion was causing an average of one pinhole leak per month. And they were considering, obviously, they were looking at what's the solution to this. So they were considering a pipe replacement at the $1.5 million price point. Huge investment. So after they decided on a sodium silicate system that was installed, instead their leaks dropped by 99%. And they were able to prevent that completely, the pipe replacement cost. And to this day, they've maintained those savings. They've maintained their reserve fund and stability with their costs. So it was pretty pivotal for that building. Now, water events are not limited to pipe corrosion, so we must fight on. The response gap is what we're after that we talked about before. So we have to use a system in order to make our buildings smarter. And we have to be able to automate this. Now that way, water events are monitored constantly. They're not dependent on the human, and they're consistently monitored and instantly monitored. Now that involves a coordination between a few different technologies, between water sensors, automatic water shutoffs, flow monitors, and it has to be managed easily with an Overwatch program and one that's going to work for your particular management style and scalable for you. So we consistently just our company uses Safehouse, but there are a few different systems on the market. So it's important to make sure that you're choosing one that's going to be the best for your circumstances and are going to hit all the main quality points that are needed to actually be an effective investment. A few, as you can see on the screen, LoRa-based systems are going to be superior. And if LoRa is not something that you're familiar with, it's a signal type like Wi-Fi, but it's a small amount of information that is sent a long way. Now, for instance, the system that we use and that we integrate can communicate up to a quarter mile. So you can see how effective that would be. And with any system that you do choose, you shouldn't be dealing with a short battery life on devices. It's just not worth your time because then it takes away from all the convenience and lessens the reliability of the system when there's an emergency, when the power is out. So you need a system that's going to be able to continue to work even when it's not powered. A proper system is also going to communicate with an automatic water shutoff to cut off flow to that particular supply line or that specific unit or that specific toilet or sink within seconds. It has to communicate clearly, has to be quick. And it should be a scalable system, especially if you're viewing this and you're a property manager. You need something that you're going to be able to use to monitor all your portfolio. Especially the platform should be able to be seamlessly deliverable with usable data and alerts that can be customized to the preference of building and the protocols within each building. And with all of this, it's important to have a team that is of a proactive mindset, whether that's property managers or condo managers that are going to work with the system. And then it will mitigate a massive amount of risk. It's going to save considerable time and a lot of money over the long term. So here, again, we'd like to take a case study. We shouldn't just take this in theory. So let's look at this practically. This is a building in Vancouver. It's a pretty good size, and they were almost at the point, similar to the other building, but they were at the point where they were almost uninsurable because of so many major water events. So they were in a really bad spot. Their negotiated deductible was $250,000. Annual insurance, it had increased because of the amount of water events. It had increased by $90,000. And the residents there were individually required to get policies because of the high deductible, and that turned out to be about $1,000 per year for the residents themselves. Now, in this case, a system was put in place. It was the Safe House system that we use. It was integrated, and the deductible dropped to $75,000 a year, which is a huge savings. And then they got discount on premiums, which saved them $80,000 per year. And no individual residents had to have any individual policies anymore. Now, that's just the insurance savings. Never mind the restoration in reputation and in condo sales, because now you're looking at an insurable building, and the lack of water event damages was massive savings, especially over the long term. So some takeaways with prevention is that systems exist, they're common, they're widespread, and they're capable of handling water events effectively. We don't have to wait for water events to happen and cause damage before we react. We can get ahead of many of them. But it just takes a proactive mindset and approach to not slump into conventional reaction to water. So that's what we're trying to get away from by bringing a few solutions together. Using corrosion control and leak management systems like we spoke about, we can reduce damage from water events massively. But in the event that water does behave differently, or there's something unexpected that happens, or an accident happens and water does do proper damage, managing response is going to be very important. And that's why I leave it up to Amanda Silvestri, who Ruth will introduce now.
Thanks, Erin. I did have another follow-up question for you, Erin, just before we move on. You had mentioned the proactive mindset of people on the property management team, board of director team. What advice would you give to, you had shown examples of maybe older buildings, but what if you had a brand new condo? How could you be proactive right starting in day one?
Well, yeah, that's a great question, actually. If we looked at particularly the leak shield sodium silicate system, and usually we spoke especially about the pain point of integrating them at the 30-year mark. But we're finding more and more buildings will integrate them nice and early so that they can maintain the integrity of their plumbing infrastructure, so that they never get much corrosion of any kind. So getting ahead of things is amazing, and it saves on the budget right off the hop. As well, we're also starting to get a lot more engineering firms that are building in leak detection systems within the design. So it's always, I mean, we're a very proactive company. We like to see the same attitude approach with new buildings, because you might as well not wait until there's pain before you put in something that's going to make your building healthy. Prevention can't be too early. Get in. Water will not be waiting for you. It's going to start attacking your building right away. So you might as well put in prevention systems as soon as possible.
Awesome. Thanks for your input, Erin. So now we've identified the risk. So we know what's present. We know what can happen. So what about when it actually happens? What is the plan and what is an effective response? So Amanda Silvestri, she'll be going over our section on how to restore when water damage does occur. So she's a business development director at Renolux. So at Renolux, they specialize in emergency restoration, response planning, risk mitigation in the high-rise industry, condominium industry. So she also leads, you may know her already, she leads education initiatives across Canada, across Ontario, using the CMRAO accredited courses. I think we should rename it to something shorter personally. But she often speaks in webinars and does speaking engagements on this topic. So she's super knowledgeable. So Amanda, floor is yours.
Thanks, Ruth. Okay, quick thing before we start, and I want to preface this by just saying, these are such loaded topics, and like Ruth was saying, I had the education incentives for Renolux, and we've got a number of courses that are accredited, and we hold courses all the time. So I'm used to talking about these topics in much lengthier time frames, 2 to 3 hours. So I'm going to try to squeeze this all in about 12 minutes, 15 minutes max, so that I can lead off to Lindsay. But yeah, so Renolux, we're an emergency restoration company focused in the GTA. And a couple of things I want to mention before I dive into some of the content that we're going to talk about today is getting the right vendors in your response is really critical. And I want to highlight the corner of the page here. We're fully certified through the IICRC in applied microbial remediation, commercial drying, fire and smoke restoration, health and safety, odor control, water damage restoration, trauma scene, and biohazard cleanup. And you'll see on the left side of the screen, there's a small certification logo here, and this is the certified firm logo. Anyone that you're bringing in, your portfolios, your buildings, should have these certifications depending on the emergency that you're bringing them in on. So I strongly urge all of you on the call, managing your portfolios, to make sure that you verify your vendors before bringing them in, because who you have on site will also lend a hand in how well you can mitigate losses. So to dive in, I'm going to talk about three really critical points, a couple of which I think get overlooked a little bit, to be quite honest. It's a natural reaction and instinct during times of high stress that we kind of lose sight of what we're supposed to be doing, and we have a difficult time making decisions. And a lot of times we focus solely on, oh my God, there's water, I got to call my restoration company. And then you kind of freeze. But there are a number of other issues that you need to consider and you need to put in practice in your emergency response protocols. So, one being, and very, very important and top of mind on the list, is life safety and risk containment strategies. Next, we're going to talk about speed of mitigation and moisture control, which is kind of the usual that you'll find out of a restoration company. We're going to talk a little bit of the technical aspect of water damage and how to mitigate loss. And then we're going to talk about briefly some communication strategies and operational coordination, which is also key in managing these types of losses. So, life safety and risk containment. Most buildings are not failing because of the leak, they are failing because of the response. So, some of the immediate considerations that, and this is what I was talking about, that get overlooked sometimes, is that along with calling our plumber, a restoration company to get on site, we need to take into consideration our electrical systems, our fire systems, our elevators, and structural components that could be compromised as a result of the water loss. You also have to consider things like, is there a slip and fall risk? Are residents trapped or vulnerable in the building? Some of the biggest mistakes I think that property managers can make in these situations of high stress is also to focus on only the visible damage that you're seeing with a water loss instead of hidden migration, electrical exposure, system failures, and certain escalation risks. And I'll focus in on one of these concerns that you kind of need to highlight in a lot of cases. And if we're talking about, let's say, your elevators, and we're in the midst of a loss, what is it that we're supposed to be doing when it comes to our elevator systems? Well, I mean, you're assessing for water migration first and foremost near your shafts and your elevator pits. You need to remove all of the affected elevators from service if necessary and immediately. We need to prevent elevators from operating through flooded areas. This is really, really critical. You need to notify your elevator contractor immediately. So this is why I'm saying it's not just about getting in touch with our restoration or our emergency response restoration companies or plumbers, which is the most immediate, but get online with your other vendors who service and maintain these really critical components in your buildings. Um, yeah, that's a big one. So, a couple of case studies here for you really quickly. And these are really, really common ones. I'm going to give you kind of best case scenario, and then we're going to move into worst case scenario. So, scenario is a 2-inch domestic water riser bursts on the 18th floor of a 32-story condo tower at 2:15 in the morning. Now, in an ideal world, and if you have prepared your emergency response plan accordingly, within the first 10 minutes, your concierge will identify an active water flow or active water flow immediately through a leak detection system, ideally. Emergency shutoff procedures are known, they're deployed. On-call plumbers and restoration vendors have been dispatched. Elevator protection has begun and affected electrical areas are isolated. Hold on, this little guy is in my way. Sorry, guys. Within 30 minutes, water source has fully stopped. Restoration crews are extracting standing water. You've got impacted units that are being identified not only vertically but horizontally. And we've got residents that are being informed quickly and calmly. Within 60 to 90 minutes, let's say, moisture mapping has already been initiated by your emergency response suppliers. Containment strategies are being established. Your HVAC impacts are being assessed. Your elevator pits have been checked and your drying plan is being implemented. So the result when we're handling a situation like this with a lot more ease and control and planning is that maybe you only have 6 to 8 units that were affected instead of 30 plus. We've got minimal secondary damage. Elevators remained operational, no mold growth. We've controlled insurance claims and our residents have remained calm. Now, on the flip side, oh, why have I lost control? Oh, no, here we go. So on the flip side, sorry, we went ahead 2 slides. An event can become catastrophic pretty quickly. So now, in the first 30 minutes, same scenario. First 30 minutes, staff is unsure where the shutoffs are located. This is detrimental, and I'm going to be completely honest. We hear this way too often, and it is usually when they're overnight, because if we're not supplying our concierge or any security staff that are on site with these types of protocols, then that's where we drop the ball. So staff are unsure where the shutoffs are located. Multiple vendors are being called with conflicting instructions. Water is continuing to flow unchecked. Residents are panicking. They're starting to post online. Elevators continue operating through active flooding. This is a major one. By 60 to 90 minutes, water has migrated from the 18th floor down to the 3rd floor. The elevator pits are flooded. Fire panels begin faulting. Hallway ceilings are collapsing. Electrical rooms are being threatened. HVAC is spreading humidity and odors throughout the building. Now, by morning, in a scenario like this, we've got 40 plus units that could have been impacted. Multiple residents are displaced. Elevators are offline. Major reconstruction is going to be required. Insurance costs are going to escalate dramatically. And we've got building operations severely disrupted, not only in the moment of the loss, but post-loss. These cause major, major logistical issues within the building. And of course, you know, the possibility of life safety impacts are catastrophic and can be possible. So, moving on to the speed of mitigation and moisture control. So, a little bit more technical here. Water damage is going to grow exponentially with time. And we know this. And water is going to take a path of least resistance. It's going to travel down. It's going to travel across. Humidity spreads throughout shafts and corridors as well. Drywall, insulation, flooring, cabinetry all begin deteriorating from the time water touches them. Mold amplification risks increase rapidly. Now, some critical actions that need to be taken immediately is extraction, rapid extraction. And I will preface this by explaining, once again, we could talk about this stuff for hours. We have other courses that are available. Go to the CMRAO website. We have one very specific to rapid structural drying, and it gives you a lot of hands-on knowledge. But briefly, extraction is critical. Moisture mapping is critical. Drying strategies and controlled demolition. So some of the biggest mistakes, and I mentioned this earlier, is waiting for visible damage. All of you know when you have a water loss, about 30%, 40% maybe of what you can see visibly is just that. There is the possibility that you've got 60% of water hidden behind walls where we can't see it immediately. And some of the repercussions of handling these situations improperly is we've got trapped moisture, concealed cavities, migration through pipe chases, under cabinets, under baseboards, behind vinyl wallpaper. And this is a tricky one too. Water doesn't like to migrate through wallpaper, and that's where you're going to find a lot of hidden issues. Which leads me to moisture mapping. So if you don't have the right crews in on site who are using the right equipment, then you cannot effectively moisture map. And if we cannot moisture map, then we cannot control the loss. And we end up having secondary damage and a much larger issue, especially when it comes to insurance claims. So moisture mapping is a process of identifying, measuring, and documenting how far water has migrated through a building following a leak or a flood using specialized equipment, such as what you're seeing in this image here, which is moisture meters, thermal imaging cameras, and hygrometers. What we're doing and what our crews are doing on site, and when you have the correct vendor on site, they're using commercial grade equipment, not what you're finding at Home Depot, not what you may have in your office to test little things here and there. These are machines that are in the range of, in some cases, $1,000, in other cases, $8,000. And what we're detecting is where moisture lies, where it has traveled, and how it needs to be removed. So qualified restoration company is going to determine a number of things for you. What materials were affected? How wet are they? Where hidden moisture exists, and how far the damage extends beyond what is visibly seen. So the risk of improper moisture mapping is the most obvious ones. Yeah, okay. If we're not identifying where all of the moisture is, then we're going to have mold growth. We're going to have odors. We're going to have indoor air quality issues. You're going to have some secondary damage as a result of those things. But on the flip side, and what I think a lot of people forget is without the proper moisture mapping, you also have issues like removal of unnecessary building materials. So if you're bringing suppliers in with or without this equipment, specifically without, yeah, you could be leaving moisture in the wall, or they could be looking at a wall saying, well, I have to remove this entire span rather than a selective area. And so having this type of equipment and having the right people in on the job, moisture mapping immediately when you're in circumstances where you have major water loss is critical. Another thing I want to leave you with is drying time. So really critical. It shouldn't take much more than 3 days to dry a space. If water has been extracted efficiently, which is what I was talking about a couple of slides ago, and we've removed as much moisture from the building and from the spaces as possible, then drying shouldn't take much more than 3 days. So when we see longer drying times, when you've got vendors who are leaving equipment in buildings for 5 days, 6 days, 7 days, this means that somewhere along the way they did not follow the protocol. They did not extract enough water. They did not remove enough building materials. They did not moisture map effectively. And these can be catastrophic for you and your claims in the long run. I'll leave you with communication and operational coordination. Some of the biggest problems usually become, we talked about this a little bit at the start, but confusion, delayed decisions, and these are all natural for us in circumstances where we're under high stress. Contradictory instructions, so not knowing who the leader is, not having a plan in place. You've got a number of people who might be on site during a loss, and if nobody knows who to go to and nobody knows who is responsible, then we come across really, really major communication problems. Poor vendor coordination, resident frustration, lack of documentation. Most important, like I said earlier, who's leading the response? So some best practices that I'll leave you with is establishing an incident command approach, one lead coordination, clear communication chain, consistent updates, action tracking and documentation in real time is super critical, and getting the right people on site who are using the right tools and the right technology is really, really critical. Last thing I'll leave you with, when it comes to your insurance losses and insurable claims, having the right documentation is going to avoid major scope disputes, insurers that are questioning your mitigation efforts, secondary damages, of course, and liability exposures will decrease significantly. Having all of this stuff in place, really, having a leak detection plan in place, like Aaron was talking about, having the right vendors in place. And then, of course, we get to the point where how are we handling this loss up until now? How are we paying for the damages? And my friend Lindsay here is going to kind of take over from me and give you some information about how you fund these issues and what some of the common issues in the industry are for buildings and for corporations and for management companies in dealing with major water events and losses.
Thank you so much, Amanda. That was super, super practical, helpful information. Really well done. And just like you said, now we have in this picture, our immediate crisis is under control. We have our restoration team working, getting things back into good shape. But where does that leave us with our funding? How can we plan ahead to be prepared when these incidents inevitably will occur? So we'll have Lindsay McNally speak on that for us. So she's the director at the Condominium Lending Group. And so she's worked with many condo corporations across Ontario, helping them with their financial management, operations, governance, and their strategic planning. And she's really, widely recognized in the industry for her. She was a president of the CCI Toronto chapter. So many of you may be familiar with Lindsay, but she'll be sharing her insights with us today. Go ahead, Lindsay.
Thanks so much, Ruth, Amanda, Aaron. We have a really great attendance at this webinar today, and I actually do see a lot of names that I recognize, people that I see routinely, but also many people that I haven't seen in a bunch of years. So thanks everybody so much for joining us. You might be thinking at this point in the webinar, all this sounds quite expensive. So I'm kind of here to tie in the financial considerations that you need to think about, whether you are thinking about risk mitigation or you're thinking about risk response. How does this actually function and tie into affordability for condo corporations and maintaining our financial assets? So the first point I want to make is that water leaks cost money, okay? Even if it is an insurable loss, even if you're carrying insurance for this issue, there are still costs. And these costs typically are unexpected and or unbudgeted cost. So they do have the potential to disrupt the financial planning cycle and the financial health of the condo corporation. So the reality is, in addition to sort of physical and operational plans for dealing with your water losses, you also need to have contingency plans in your financials to help you deal with it and respond appropriately. So some of the costs that you might encounter in the event that you do have an insurable loss or a water leak, you'll have insurance deductibles that you'll have to pay. You may have losses for which the corporation self-insures. So these would be losses that are less than the amount of your insurance deductible, or if you have a really high insurance deductible, you are insuring on your own a large portion of the loss that's happening. You might have emergency repairs. Typically, under an insurance policy, the cause of the leak is not included in the money that gets paid out by your insurance company. So you may have unexpectedly have to rip out walls, replace risers, whatever it is that is the cause of the leak, you're on the hook to pay for that. And they can be substantial issues that cause these things. There's also drain on building staff and also residents, frustrated residents who may be dealing with repeated water loss. If you have a major water loss that's affecting 100 units, imagine yourself as the condo manager having to coordinate and communicate with all of those people whose lives are disrupted as a result of the issue. So that it does not directly have a financial drain, but it does have a drain on that staff's ability to manage everything else in the condo corporation. And then the last point here before I move on to the next slide is I really want to refer back to Erin's case study, the building that was able to kind of get better control of their finances and their insurability as a result of proactive solutions. Even though there is an upfront cost of proactive solutions to prevent some of these water losses, they are typically less than long-term allowing your building systems to fail and leak all over the place and create issues and headaches and financial strains for your condo corporation. So I'm going to dig a little bit more into detail into some of those issues. The first I want to talk about is the insurance impacts. Okay, so when you have a water loss in your condominium corporation or multiple water losses in your condo corporation, you will typically have some impact on your premiums. And I think we don't have to look that far back to realize that the insurance market for condo corporations has been volatile. Okay. Right now, people kind of forget about it. We tend to have short memories for bad information, but it was less than 5 years ago that we were in a hard market. Insurance premiums were rising, deductibles were rising, buildings were struggling to get insurance. We've kind of gone around the cycle of insurance right now and we're in a soft market, but that doesn't mean that the soft market will last forever. So if you have a poor history of claims, you can expect your premiums will rise. As well, oftentimes, if you do have a poor history of insurance claims, your deductibles will also escalate. And we have seen this historically in the condominium market, specifically relating to water losses. Okay, high-rise buildings that are having repeat issues because there are problems within their building systems. Sometimes even brand new condominium corporations will have the struggle that the insurance company will increase your premiums or your deductibles quite drastically. Why do they do that? Because they don't want you to use your policy repeatedly, right? They want to force you to self-insure a bit so that they are managing their own financial risk. Okay, but high deductibles have an impact on the corporation's overall financial position. If you have a $100,000 deductible, how many of those deductibles can you shoulder in your operating fund before you find yourself in a deficit position? It's typically not a lot, right? Even if you don't find yourself in a deficit position, you do still need to take steps to recover your financial position into a positive surplus balance, because that's just good financial planning for condo corporations. We do want to have a bit of a cushion in our operating surplus. Even one significant event can have this impact on your policies, okay? Oftentimes we talk about repeated water losses. We certainly want to avoid that, but even one unexpected event can have a significant impact. So just be cautious if you are starting to see one major water leak or multiple major water leaks in your condo corporation. Be aware that this can narrow your insurer's appetite, driving up your premiums and deductibles. And it can also trigger other issues in your policies like conditions, exclusions, or coverage restrictions. I also want to talk a little bit here about self-insured events. So when I talk about self-insured events, I mentioned it before, but I'll just repeat it now. I'm talking about events that are, less than your insurance deductible, therefore you would not make a claim. Or if you have a very high deductible, just the value of that deductible actually is self-insuring for a portion of the loss, okay? So the reality is that there are lots of condos out there that are self-insuring, a large portion of money and a large portion of the risk. So Amanda in her presentation identified the importance of responding right away, of making sure that you have the right players in the field to do the work. And that work is more extensive than you realize. Actually, when we were preparing for this webinar, I had a water loss in my own house, and Renelex was kind enough to come and sort of be the lead on that water loss in my home. You think, oh, it's a little bit of water, it's clean water, it comes from my hose, no problem, not a big deal. It's $30,000 worth of damage right there, right? And had they not responded, I personally would not have realized the extent of the damage, even with my extensive experience in the condominium industry, in my past role as a condo manager. So this comes at a cost. If you're self-insuring, it's still important that you have the right players in the field, that they are doing the right things, and you've got to pay for that, okay? Because otherwise, the subsequent damage that could result from your building will only increase the cost over time. So how do you deal with a gap in available insurance coverages, particularly when there's risk for repeated major financial surprises? Well, one thing that you can do is look at your budgetary practices, okay? Look at the risk profile financially, how it relates to your building's history of insurable losses and your deductibles in the policy, and make appropriate adjustments proactively, okay? Also, if you do have a history of water losses, a history of risks, it's time to dig in, figure out why those risks are happening repeatedly, look at prevention systems, okay? Look at response plans, because having an appropriate response plan also can save you money in the water loss because you are catching it before it gets worse. So that proactive approach really is beneficial long term. And when we think about, proactive financial planning, this is really just good governance in a condo corporation. So as a condo manager, and I know we have mostly condo managers in the crowd, if your risk is predictable, if your financial statements tell you a story that you have really high plumbing costs over time, if your insurance renewal is a stressful event in your condominium corporation, it's time to change the narrative and start talking about prevention and coming up with a realistic plan to make that prevention possible. Okay. The prevention is going to minimize the risk of operating costs and benefit the corporation's long-term financial health. And you certainly don't want to fail to address it because, we know the outcome there, right? I myself have worked in condo corporations placing loans, many of them over time, that have had these huge drains on their operating funds, not just related to water losses, but for a number of reasons, when actually the right solution is to address the root cause of the issue, whether that's by capital repair or some leak prevention system. You really do have to make sure that you deal with it before it starts costing you hundreds of thousands of dollars of unexpected money year over year over year. So when you are trying to develop a plan to address these risks, you need to have clear defensible rationale. Okay. As a condo manager, first you need to convince the board of directors that it's necessary. And then in some cases, you may even need to convince the owners that it's necessary because the financial component is so important and you need their support in that regard. So when you're trying to develop a plan to deal with these things, you need to make sure that you address why the action is necessary, what options are on the table for consideration, and then also have a plan for how you're going to pay for it. So in terms of your funding options, there's two really common approaches that condo corporations use, and that is special assessments or borrowing as a condo corporation. I'm not going to talk about budgetary adjustments so much because that is something that you can do proactively, but you really need to look at the risk profile of the individual condo corporation to set yourself up for success in that area. Now, why do we only have these funding options? Because in Ontario, condo corporations are not-for-profit organizations. The only real source of revenue that they have is from the unit owners. So whatever we're talking about doing in a condo corporation, that money comes from the owners. Special assessments, there is very clear authority that condo corporations have from a governance perspective to just levy a special assessment and move on. But anybody who has actually ever levied a special assessment knows that they are not as easy as that. Okay. They can create political issues in your buildings, upset and unrest with the individual unit owners. And if there is a water loss that's just happened that's affecting a whole bunch of unit owners, those people are probably already hot under the collar. And we don't want to add a financial surprise to that as well. So borrowing for these condo corporations can be really advantageous, okay? If we are trying to set up a funding prevention strategy, we can use loans to the condo corporation to spread those costs over time, to get the work done now, avoiding hardship, cash flow disruptions. And then you can use the loans with amortization that's similar to the life cycle of the improvements. So by the time you're renewing those components again, the loan is paid off. The only impact to the individual unit owners in this scenario is that there might be slightly increased condo fees as a result of the loan transaction. But those increasing costs can be compared to the savings that you'll achieve as a result of risk prevention, okay? So what are our costs related to these problems? How much have we paid for these problems over 3 years, 5 years, 10 years? And how does that compare to what the additional cost will be in our condo fees to take a loan, to take corrective and preventative action? Return on investment is a very good communication strategy, or it's very helpful to the communication strategy with owners for getting them on side that the issue is necessary. Because although they may pay slightly higher costs, now, longer term and into the future, it's going to be beneficial for them and the condominium corporation that they live in. Now, which financial strategy should you choose? It is a little bit difficult to talk about these things from a general perspective because when it comes to condo financial planning, every single situation is fact specific and unique. So as part of my role as director at CLG, I specialize in developing financial plans and financial strategies that are sort of holistic in nature. And I do provide no cost, no obligation reviews of any financial situation or challenge that a condo corporation is facing. And I actually will help you to develop that financial plan in a way that makes sense to the board and hopefully with the owners. And if a loan transaction doesn't make sense for your condo corporation, I don't like to place loans where they don't make sense. I also will simply be honest with you about my thoughts in terms of the right solution for the condo corporation so that you get the right advice for your clients. A couple of quick things on the borrowing process itself. I believe most of the people who are joining us today are in Ontario, and this program is accredited for CPE credits for condominium managers in Ontario. So I am focused on the Ontario market with these comments. In Ontario, condo corporations do require a borrowing bylaw in order to borrow funds, okay? Now, sometimes condo corporations have built into their existing bylaws some borrowing provision. So if we're talking about minor upfront investments such as leak prevention, if we're talking about an insurance deductible that you have to pay that the corporation really can't swallow, you may actually have an existing borrowing provision that supports you, and you don't need to do additional governance work. However, if the cost is significant, the amount of money is significant that you're looking to borrow, perhaps part of your risk prevention strategy is a capital repair. In those cases, you might need to pass a specific purpose borrowing bylaw. You shouldn't let that scare you. Okay. My personal success rate in working with condo corporations placing loans is that we pass about 9 out of 10 bylaws. People think bylaws are really difficult to pass because a lot of times in the market, we're passing sort of administrative style bylaws like, oh, a standard unit bylaws. The owners don't understand or care, and it's really hard to get people out to the meetings to participate in those votes. But when there's a major financial issue, my experience is that the owners do tend to show up and talk that through with the board and hopefully lend their support to the financing strategy that the condo corporation or its board has put together. So if you do have to pass a specific purpose bylaw, just a reminder to anyone who doesn't know, to anyone that knows, you do need to have a simple majority of all unit owners in favor of that bylaw. Okay, so that's the voting threshold. The success of passing a borrowing bylaw largely requires clear, transparent communication to the owners, full disclosure, full discussion, listening to their feedback as well. But you really do need a communication strategy. And at CLG, that also is something that we provide support for our clients. We help with templates and tools and letters and presentations to make sure that the owners are fully informed about the options that are available to them. Okay, so just lastly from me, I want to talk about some key messaging elements in the event that you do need to pass a bylaw and you need to get owner support. If there has been an insurable loss and people have been impacted by it, make sure you're communicating what is being done to prevent recurrence. People want to know that once their unit has been restored, that this problem is not going to happen again. And if it happens again and again, they're going to be real mad at you. So you have to make sure that you're thinking about preventing recurrence. If you are looking at putting up some capital towards prevention of these issues, what is the financial case for it? I talked about return on investment and things like that, but you really have to think about why it's beneficial to the condo corporation. It's not always about the money either, right? Sometimes it's about the lives of the residents and the owners who are in the condo corporation. If you're borrowing, it's pretty easy actually to demonstrate how that borrowing protects the corporation from liability, the individual owners from loss, and then also the future insurability of the property, which is something to consider. If you have a building that is just leaking all over the place, at some point the insurance companies are going to say, no, we're not insuring you anymore. And it was about 5 years ago where we had a market where certain buildings were having a real problem getting insurance as a result of that issue. And then lastly, if you are making an investment into this, make sure that you're positioning it properly, right? This is not a discretionary upgrade to the building. This is a risk reduction investment. It's necessary maintenance and improvements to the property, and therefore the owners should support it. So with all that said, I'm going to pass it back to Ruth now, and I think Ruth is going to take us home.
Awesome. Thanks so much, Lindsay, for the education. That was excellent. We truly have a stacked panel of experts today. So this does bring our webinar to a close. So this is the end of the story. We've understood now, first we discussed risk, understanding it, mitigating it, moving through a response strategy, and then of course, how to be financially resilient. So key takeaway, these three things are really not separate. They do work together, and they're connected stages of a successful system. So prevention, response, planning all determine how successful a condo corporation can be when they're weathering these water events and floods. So thank you so much to our attendees for joining. Thanks for spending an hour with us. If you have follow-up questions, I know there's some in the chat and in the Q&A we might not have time to get to, but please reach out to us. We'll make our contact info available to you, and we'll get over a recording of the slides to you as well. So also thank you to our speakers. Again, Erin, Amanda, and Lindsay. Great work today. Thank you so much. So again, if you have questions specific to your building, reach out to these experts. Use their knowledge and their expertise to your benefit. But we'll close it off there. Enjoy your Wednesday, everyone. Thanks for joining.